How do you find an insurance company to start your own banking system? Well, by the end of this video, you will know everything that you need to consider before getting started. My name is Carmen.
And I'm Darius. And we have policies with 3 different companies, and we see illustrations every single day from a variety of different insurance companies. Spoiler alert, there's really no difference in the cash values. Why? Because these insurance companies are regulated by the exact same rules and regulation. So if an insurance agent is trying to tell you that my company is the best hands down period, that's really not the case. In this video, we're going to share with you 4 things that you need to know to make the best decision for you on choosing a mutual insurance company.
Okay, so the first point that we want to make sure that you're aware of is if you're getting a policy for banking, it needs to be with a dividend-paying mutual life insurance company. So let's break that down a little bit more. We've talked a lot about dividends on our channel, but if you haven't seen any of these videos about dividends, a dividend, what happens is when you're working with a mutual insurance company, meaning it's beneficial for both you and them, they will pay some sort of dividend if it is available that year. So what a dividend is, think of all the policy owners paying their premiums every single year. And the insurance company is going to use that money to pay all of their business expenses. So whatever money is left over at the end of the year is returned back to the policy owners. So a dividend is a return of premium, but it is not guaranteed. But it is important to make sure that you work with companies that can pay dividends and that it's mutual. Now the second point that I want to address is be aware if you're working with a company that is direct or non-direct recognition. We go into way more detail about what this means, so you can check out this video here after we cover these points. But the fact of the matter is just making sure if the insurance company recognizes when you get a loan, and if they do recognize it, are they going to hold a portion of your dividends?
Comment below with which insurance company you're currently working with for your banking needs. And while you're leaving us a comment, make sure you subscribe to our channel and make sure you hit the notification bell, because in our next video, we're going to be interviewing one of our clients so that you can hear his journey for yourself. Point number 3 is loan fees. Now, the reason why this is so important is because how we actually utilize our policies to replace the banking functions in our lives. What this does is it requires us to get loans. So it's really important that you understand what are the fees associated with getting a loan from the insurance company.
Now, when taking these loan fees into consideration, you could be teetering between a few different companies. So if one company charges you 5% and the other charges you 8%, and they all have the same characteristics besides that loan fee, then you may want to go with the cheaper loan option so that you can keep more of your money as opposed to spending more of it in fees.
And another thing you'll want to understand is the loan rates adjustable or is it fixed?
Good point.
The difference between adjustable and a fixed rate loan is the fact that a fixed rate stays exactly the same the entire time. An adjustable loan fee is exactly the way it sounds. It can be adjusted. So this is something that you really want to know before working with a company and creating your banking system through a company that provides a fixed or adjustable rate loan.
Now, before we move on to point number 4, what I want to clarify is with point number 2 is the company that you're working with direct or non-direct recognition. And then point number 3, talking about the interest rate. None of these are deal breakers. I want to make sure that we clarify that. If anything, we just want to make sure that you understand the characteristics of the insurance companies that you're working with, because these are things that you should know about the companies that you're working with. So again, these are not deal breakers. Just make sure you understand the facts.
Point number 4 is the company rating. Something that you should be aware of is the AM Best company reports. It's the oldest provider of ratings and financial data in the industry. So go to ambest.com to get the latest information on some of the companies that you are researching to do business with.
Yes. Now, the thing to keep in mind is AM Best is a great tool to use because a lot of people like to say size matters. But in this case, size really doesn't matter. It's all about the rating. Depending on the company's size, of course, they're going to have much more money in the bank. But you want to make sure that all of the companies that you are choosing to work with have a rating of A or higher. And we feel like it's important to share this information with you so that we can just relieve some of that stress when it comes to choosing the right insurance company for you. As long as the rating is an A, then the next step is just moving to making sure that you're working with an agent that you feel will coach you the best through your banking system. And speaking of agents, if you want to become our client so that we can coach you through your infinite banking system, then click on the link below to become our client. And if you like this video, be sure to give us a thumbs up, comment, and share.
Remember to own your own lifestyle.
Or someone else will.